You will be placed into the conference as a listen-only participant.
Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. And we're going to today review just the last couple days in the market, kind of figure out what's going on ahead of us. And then I have a couple interesting charts that I wanted to show you today. We've been talking about technology and biotech the last couple of weeks. And there's another area of the market that I think you should be looking at that we may be able to get a pretty nice trade going forward here. At the end of this time period, I usually talk about 20-25 minutes, and then we go into a question-answer period for about 10-15 minutes. You can ask about individual stocks or indexes. But anyways, to get started here, the second week, the major averages were pretty much stuck in neutral, very narrow trading range, not able to make much headway. We have been able to punch a couple of new highs on the big three indexes, but nothing, much of a breakout. Volatility is very low, volume's very low. This week, we did have a breakout this morning up into new highs for several of the indexes, but we're kind of waiting on Friday's talk in Jackson Hole, Wyoming, where Janet Yellen's going to give an update on the economy. We had some people last week saber rattling about the possible rate hikes in September, which would probably be negative for the index or for the overall market. But I think she's probably going to back off of that a little bit. That should allow the dollar to move down a little bit lower and possibly stocks to move higher. Unless she comes in and is very hawkish about a September rate hike, which is still only, as of today, I think we're at 12% or 18% chance right now that September rate hike is pegged. That's by the CME Group FedWatch. So very, very unlikely that she's going to do that, especially going into an election. So, but we have had a move up in December on the FedWatch program. We're up to about 55% now. That was actually just about 40% about a week and a half ago. Okay, our CTI, which was slated at one point to go negative about a week ago or 2 weeks ago, is still bullish. A lot of that is due to the market momentum that we've had, which means that the other indexes are outperforming the Dow in here. And that can, as a sign of strength, even though overall momentum in the different indexes is actually almost negative at this point. And I've also have adjusted the CTI where it had made a low about 2 or 3 weeks ahead of before the Brexit vote. And then the Brexit vote came in and we actually made a new low. And when you do the cycles, you have to restart them on a new low. I avoided that for a little while, but now I think that we're going to, I've adjusted them out to where the Brexit vote was the cycle low, and that will probably keep us neutral to bullish at least into September at this stage. But you do need to check in on Fridays. If by chance we'd have a couple of days where we'd start to roll over because of some economic data, we could adjust that there. But at this stage, I'm looking probably for bullish, stay bullish on the market posture, and we may go neutral, in the next week or two. We'll have to see what the overall momentum indexes are. Okay, sentiment index fell to a -1 last week. Most of that was because the bullish investment advisors went above 55 up to a 56.2. That's getting up to the range where it's actually bearish for the market. And then bearish investment advisors are now at 20 or below. And that's also bearish because it means that no one's bearish. That's not a good sign. Strength indexes, we saw some accumulation going on last week, which was the first time in about 2 or 3 weeks. So that also points that we may see some higher prices. The AD line on the NYSE made a new high last week. And also the new 52-week highs have been not expanding, but we do see, they're still supportive of a neutral to a higher market. Okay, what we're going to do right now is look at a couple of the major, I don't know what that is. Carl wants to control the presentation. Okay, we're going to look at the major averages, and then we're going to look at a couple of the sectors and in particular, we're going to look at the energy sector. And I have a couple charts from the oil industry that I want you to look at and be aware of some things that are going on in that. You may be able to get a pretty nice trade in a couple different stocks that we'll look at. Okay, first of all, here's the Dow Jones. Again, you can see this sideways pattern up here. Amazingly, we're kind of been stuck in about a 300 or 400 point range since mid-July. There are some signs of weakness, which you'd expect in a sideways market. You can see the short-term MACD has been negative since about mid-July or the end of July. 30-day stochastic has rolled over on the Dow, but the RSI is actually starting to build up a little bit, which is a positive. If we go to the S&P 500, again, we're that narrow range, low volatility, low volume. This has actually been in about a 25-point range, which is, again, is amazing for this long. This goes all the way back to mid-July. We want to keep an eye on the Dow and the S&P 500 on this August 2nd low, just in case we would see something come up that we'd start to see some selling. That would, if it breaks below that, you could get a retest down here to the 2147 area for the 50-day moving average. Break below that, you're probably looking at this place over here where we topped out where was resistance. That would be around the 2115, 2120, maybe down to the 2105 if selling would pick up. I'm not sure when that's going to happen. I don't see signs of that currently. Okay, next we want to look at the NASDAQ. This has just been on fire. This is up probably 16, 17, 18% off of this Brexit low. This is a good thing. This is where we had a low on the CTI before, and so I extended it out another week or so to here. So that'll show you that cycle would have completed here. That's why we're extending the market posture out to bullish. From the NASDAQ, you can see it's you can't beat it down with a stick right now. We're up almost every day. Actually made a new high today. The August 2nd low on the NASDAQ is 5109. That's over here. Any kind of selling that would probably catch it right in there. The 50-day comes in at 5023. I would doubt that we would even get a negative in there unless you had some kind of, where Trump or something went ahead in the polls. So, again, I don't see this thing going much below 51 if you would induce some selling in there. Last, we have the Russell 2000 working its way up, actually working its way up to 10-day. I should have put that in there. 10-day moving average. It looks good. Support down here at the August low is around 1200, and that's just above where the 50-day moving average is. Okay, one of the things we looked at last week and last couple of weeks, we've been talking about the semiconductors and technology. Here's the Philadelphia Semiconductor Index. Nice trend line going up here. Broke through that resistance here about a week and a half, 2 weeks ago. Good accumulation, a little bit overbought in here, but this is the highest level the semiconductors have hit since 2000. Again, it is overbought, a little bit of a strong chart, but almost every stock you look at here is on their accumulation. You have NVIDIA, NVDA, Cirrus Logic, CRUS, Micro Semis, it's MSCC, Marvell Technology, AMD has had a heck of a run, Intel, Skyworks, on and on. And if you go actually looking for ideas in this, and you can buy this and buy any of them almost on a pullback. If you go over to the Market Edge Industry Group analysis, here's the S&P 500 versus a chart of the semiconductors, and it's just a skyrocket here. And here's a whole list of stocks. These are rated basically strongest to weakest. You can go in here, just go over the chart, look at the ones that maybe are not just too overbought, and go over, you see these opinions long, score 0, look like they're going to outperform the broader market. You even have some cheapies in here. Some of these are overextended, but this would give you a list of stocks to start with right now that you can start to pick up in the semiconductors. Okay, next one I want to look at, especially helping out the NASDAQ. We've been talking about this, but I thought you should be buying biotechs. Again, it looks strong. It broke above this kind of double top over here that it extended back into the spring, and we're moving higher on this. You look at the up-down slope over here. This isn't just retail clients. This is institutions have been buying this thing heavy since over in here. So it's still going up, still moving up. The RSI had a little bit sideways action. It's just showing that it's not overbought at this stage. So I would be looking at the biotechs. And again, if we go over here to the Market Edge Industry Group, pick up medical biotech stocks. Here's a whole list of them, which are the strongest to weakest, that you can take a look at and buy. This Exact Science has had a heck of a run. This Mallinrot, just put that in one of our model portfolios here last week. And also Biogen, I just put that in one of our portfolios. Looks dynamite, Illumina, Kite, Halo, Amgen looks good. All these, you can look at any of them, and these are probably buy candidates for you to take advantage of this. This thing I think has a lot higher to go. Here's the, okay, hold on, that kind of snuck in there. So for another place for some biotechs, let me go back. You can also, if you're one of the retail clients and you go up to the Stock Watch feature and click on the S&P 5-star and 4-star stocks, you can also just list them by relative strength, and you'll come up with 20 or 30 good biotech stocks that S&P actually has rated, as market. Fundamentally, they should outperform the overall market. But again, that EXAS, that Exact Science, Excel, Millenrock, all these look strong to us right now. Okay, the next thing before we go start to look at some of the other sectors. This we talked about that you should have this in your check this out every day. This is the ETF U.S. dollar. You can see we're kind of working our way into kind of a little triangle pattern. But Friday's talk by Yellen could influence this a little bit. If she's a little bit hawkish, this thing could move up in here to the 2480 area, which would probably slow down the oil a little bit, would slow down the emerging markets. I don't think it would kill the market, but you want to watch that. If she gets too dovish and we break down here, that could be also bearish if you break down below 24. And the reason that would be bearish is because that would probably indicate that the economy is slowing more than we think it is. But I don't think that's going to happen. You've got your inflation numbers and everything, and today we had new housing starts for July with up 12.5%. You have to go back to October 2007 to get a better housing starts number. So that's again going to add some oomph to the market. But keep an eye on this thing. As long as we're in this little sideways action here, the market probably is going to work its way higher. All right, this is the main chart I wanted to look at today, and what this is, this should catch your attention, especially if you're a student of technical analysis. And this is what I would call a textbook reverse head and shoulders pattern. And when you see this reverse going up this way, it's a topping pattern. This is a bottoming pattern. And what you can do with this, you can actually come up with some very good price targets on this. But this is the weekly chart, not the daily, on the WTI crude futures. Okay, we saw this week we've seen oil come up here around this $47.50, $48 area. And what you want to do on this is, we went back to $52 about 2 months ago, whatever. When you see this break this neckline here, this is the shoulder, the head, and this is the shoulder. This is a buy signal that every technician on Wall Street will be looking at. And what you can do with this is if you measure from here to here, you can, again, we talk about moving from moving averages, taking your fingers. If you can move that from this 27 area up to this 51, go up to the top, it's going to give you a long-term target up here around $72 a share. Now, over the short term, I think probably by year's end, I could see oil coming up here around to the $62.50 or so, $63. That would be good for the broader market. That would also, I think you would see a nice move on that. What you have to look for, though, and again, the 72 I'm looking at probably after the first of the year. But there's certain things you want to look at if you can keep track of the oil. One of them is called a failed pattern. This looks great right now, and everybody will be watching this Wall Street. And when this thing goes, you're going to see a lot of buying. If it goes up to about 52.5, 53, and then reverses, that's a failed pattern, and it could actually be called a bull trap because all the bulls would jump in here, and then it rolls over and comes back down there. That's one of the main things you have to watch for. But when this thing breaks through here, and you don't see it coming, you might see it come back here and test the neckline. Maybe if you give it 1 or 2 or 3 days before you see this breakout, that's probably that's kind of ringing the bell for you that it's probably time to move into some of these oil stocks. And we'll look at a couple of them today to keep on your radar just for when that happens. And we saw oil pull back today and had a reversal, and oil started up higher. Now this is a chart is called the United States Oil Fund. This is the ETF. You can see how far these things have gone. This is from summer of 2014 over a 2-year period. We came down here. The symbol on this is USO. We started looking at it yesterday. You can buy it somewhere around $11. It got down around $10.80. So it's not the best vehicle to play oil with. However, it is one that you could put some money into it for a trade. You've got resistance up here. If we can get that back up to around 50, you'll see this go from about 11 to 12 and change. Nice accumulation. It is overbought here. But if we can break through that head and shoulders pattern and get up to the 52 and maybe even the 62, you could probably get yourself a trade from this $11 area up here to somewhere around $16 to $18, somewhere in that category. If we have the reverse head and shoulders breakout, if it goes above that, you can get yourself up in here by the first of the year around to that $22 level. So that's something. Again, the symbol is USO. Again, it's going to depend on what Yellen says this Friday, on which way the dollar moves. The dollar weakens a little bit. That could cause this thing to do the breakout on this chart and the other chart over the near term. Okay, now this is also related to the energy spider. It's XLE. The energy sector has been in a sideways trading range. You've seen oil going back and forth over in here, really influencing that. And you kind of have a little bit of a breakout here over the last couple of days on this last surge with oil, which bounced off of from that level higher. We have resistance over here from last Friday's high. I'm not sure where we're at today, but that would be something to watch. So this looks like the breakout is in the process already. We're almost at a new 52-week high. Today we're at right at 70 still today. So we're still battling this area right here. So the breakout isn't real big, but once you get through this 71 and change, that would be another breakout to new 52-week highs on that. So the energy spider is also kind of confirming the reverse head and shoulders that we saw on oil itself. So either one of these may break out together, and I would expect to see. You don't want to see one break out without the other. So keep an eye on both of those. Okay, this is something that we've looked at quite a bit over the last year and a half or so. This is the long-term energy chart, XLE, going back to 2008. And when we broke this, when you break a chart like this, where you had 1, 2, 3, 4, 5, 6, 7, 8 times testing that upward trend line, when that finally breaks, that's a big red flag. And okay, you came up here twice and were unable to repenetrate that upward trend line. That was telling you that something fundamentally in oil was broken, and just to get out of it for a while. And of course, you went down here. You went down another from the 80s down here to the 50 on the oil stuff. But now you've seen this big bounce in here. You're almost up. You've retraced 38.2% of the retracement level, which means you're probably going to get a move up here to 75, which would be the kind of a breakout from the previous chart that we looked at. So if you go back here, 75 would take us up to this area. So that would definitely be the breakout on that. And if you get here, I think my upside target on here is probably, I don't think you're going to see oil get up here to these levels or even up to the 90 level on the XLE. But I do think that you can, let's see here, my notes on this. You could probably, in the long term, easily clear the 75 and get up here around the $80 level. Going out towards year end or maybe the first of the year. So again, this is another chart that's confirming that we may have some problems. Whether it gets up to here, I doubt if you're ever going to get into the longer-term uptrend on oil for a while, but it's electric cars or whatever's going on that I just don't think you're going to have the demand that we once had for it. Okay, so what we want to try to do here, if we can get this breakout, and we want to try to find some oil stocks to put on our radar to take a look at. Okay, again, you can go to the advanced tools, go into industry group analysis, and we've got 3 or 4 different industry groups for oil. This one here is oil secondary. It's going to, again, list the top stocks from the strongest to the weakest. You come up here with this Devon Energy. It looks strong. It's bounced from, hit a low of about 18. It's up here around 44 now, so you've already doubled. But if you come in here to look at the chart, it's just moving up a real nice line up through here. We're almost up to the point where you're going to be challenging 52-week highs. The accumulation has been rising steady, picking up some strength in here. It's a little bit overbought from this last move higher, but I think Devon Energy is DVN is the symbol on that. That would be one to look at, have on your radar that you could buy on weakness, or just maybe buy a half a position and then wait to see if we have that breakout in oil and energy over the next week or two. Now, another thing I look at on some of these things, when I'm looking at short-term targets, I'll look at the point and figure chart. Again, this shows me that if we can get through 49, you really don't have any resistance in Devon, and you could get a nice move up. This thing was traded up in the 75, 80 area about 2 years ago. So you have a lot of upside on some of these oil stocks. But again, when you do find some of the stocks in the industry group, after you look at them and see the indicators are positives, under accumulation and all, go to the point and figure chart and you can see where you've run into resistance before. 49 is the next resistance. We're at 46 right there. So you get a $3 or $4 move on that. That's a 7 or 8% trade on that stock. And if it breaks through that, you don't really have much resistance at all. Okay, another one I like up there is the oil field equipment, and this is actually my favorite of the other ones. Actually, oil field drilling is one that's probably my least favorite. I just don't see a lot of oil wells coming into production big time until for a while. But the oil field equipment with the refiners and all, I like Schlumberger, Halliburton. Halliburton was recently downgraded, but it's turned around and starting to move up again. McDermott looks pretty good. You can find the stocks to take a look at on the charts. Here's Schlumberger, a nice upward channel. You're getting up towards the upper part of this, so you can probably get a move up to 86. Accumulation is not real strong yet, but I like the channel that it's in. And if you get the breakout in oil, Schlumberger is usually one of the ones that will lead it. Here's Halliburton. You had some resistance up in this area. You're breaking, but you did have a pullback yesterday, a little bit this morning, and you can see that breaking out the new 52-week highs. If you go to a point and figure chart on Halliburton and Schlumberger, you could probably also find, see where the short-term targets would be. Another one we can look at is the oil field integrated majors. Go up in here, you can see, you get a whole list of the stocks and see which ones are the strongest or weakest on that. A couple of them look good on here. For low price stock, here's this Sanchez Energy up here around 8, went as low as $3. Another one I like, Marathon Oil. Looks like it's breaking out of this resistance area. Should move higher. Up-down ratio is starting to move up, a little bit extended, but the pullback yesterday should give you a little bit of a buy in that. So, again, with that, just to wrap it up, I think that the market should be able to work higher, especially on in the technology and the biotech stocks, and even the consumer discretionary seems to really be outperforming in here. But I want you to keep your eye on some of these oil stocks because if they really catch fire, it's not only is it going to help them, but it's also going to help the financial sector. And the reason being, because one of the reasons the financial sector was beaten up so bad was because of the outstanding loans that they have to the oil stocks. And the higher oil moves up, the less chance, the less risk there is of any of those loans going bad. So that'll be a little bit of progress for the financials and could help them to move up. I still don't see a big trade, where you want to load up on the financials for a big 20% move up. But I do think you can nibble away at the ones that are oversold, and the solid ones, the regional banks, the J.P. Morgans, even Citi looks good at this stage. So That's going to wrap it up for what I have for you today. I see a couple questions coming in. We'll see if we can get that. I'll try to share the. Let me try to share my screen first. Okay, let's see if I trade close this. See the chart now, Will? Okay. Let's grab the first one here. Let's see. What do you think about COP, C-O-P? Okay, this is the one-year chart on COP. Still have a little bit of downward. Still got to clear this area right in here. A move above 44 would probably signal that you've cleared some moving averages, some resistance in here. Accumulation is starting to pick up. It may not be my favorite one because you still have a little bit of overhead resistance, which brings up a point I wanted to mention earlier when we were talking about that reverse head and shoulders. And when you see that pattern, you go, why don't I just buy the oil stock right now if the pattern looks that great? And that is because in technical analysis, a lot of times you'll see these patterns. You want to see the breakout because they can go up here. And resistance is here. If it goes up here, bounces 2 or 3 times off that 44 range, and then turns over. Okay, you didn't want to be in it because that was a failed pattern. So in this case, you watch this in here. It gets up to this 44 and starts to break out. That would be the signal that you could probably move into that. Today we're at 43.03. You're up 40 cents. So you're back up here testing this 100-day moving average, and you're above the 50 held here. So this is, it looks good. But again, you want to see this go above the 44 before I would really commit to it. Okay. How about VWO? Haven't heard of this one before. Emerging markets ETF. Again, I love the emerging markets. We've been liking those for a while. You go back to that chart, the UUP. As long as the U.S. dollar stays low, not only do we get the move up in oil, but you also get the nice move up in emerging markets. And also one of my favorites in this group. Sometimes I'd rather than buy the EEM to get more of a move, I like Russia. RSX is one of the symbols on that. If you look at that, that's kind of a double play because not only would you get a nice move up here in RSX on a rise in oil, but you're also getting emerging market on Russia too. So I think you can look at that possibly as a trade. You see, this was up here around 29.30 before. We actually are, kind of breaking out of this level. You could get a trade up here to this old area around 21 or 20 so, and then if you break through that, you've got here. You don't have a lot of accumulation in this yet, but again, if you like the emerging markets and you like the oil play, I think the RSX is one that I certainly like right in here. You're walking up that moving average. Let me see what the 10-day is on here. Yeah, you're kind of waltzing up that 10-day moving average right in here. So that would be one of the emerging markets that I would look at. But again, I like the emerging markets. I think you need to be there and have some money tied into that. We're getting a bunch in here now. Okay, Twitter. Twitter came up as a buy here a couple weeks ago around 18. Went down to 16, and then we came back up in here. It's under accumulation. I would buy Twitter on pullbacks. It's getting to the point up here now. If it gets up to around 21, 22, I'm not so sure because when you buy Twitter, I think you're hoping for a buyout to boot. But you see a nice accumulation in here, and I think there's a better chance of it now of being bought out than there was over in this area. So if you're looking for a trade, you might get a trade up here, 21, 22 area, which is 10%, 15%, and then you kind of wait for a buyout to happen at some point. And every time there's a rumor, we certainly see it go up a little bit. Let me write down a couple of these real quick so I don't have to keep going back and forth. SPG, SWHC, EXOM. Okay. All right. SPG. Okay, Simon Property Group. It is one of the few REITs that I like at this point. Again, if interest rates, once interest rates begin to, they start talking a little bit about that. You know, at some point, you want to keep your stops on these things where you follow the trend lines going up. You're seeing some profit taking in that over here in Simon Group, and it's moved up a lot. I'm not sure what the dividend is on this. That's another reason why this is higher, but it is one of the better performers. There are certain areas, I wish I had it written down. I don't know what areas there are, but some of the areas, the REITs, like, you know, whether it's hospitals or rental properties or business parks, you can look at some of those. If you do a comparison, and actually in Yahoo Finance, at some of the REITs, you can see which areas of the REITs are outperforming. But these are okay until we start getting the interest rate talk. Okay, SWHC, Smith & Wesson. You got to like the chart on this thing, and anytime you have some unfortunate accidents happen, you do get the the spikes up, or when they start talking about taking gun control away, you get spikes up again like that. So it's a volatile stock. It is under accumulation. It's working off its overbought stage over in here. Where's the sell stop on this thing? Around 28.20. The sell stop. It's right around where the sell stop is on these short-term trades. So you may want to wait for a pullback to this, maybe down here around the 100 moving day average before I would jump into that thing. But it's had a nice run over here. I think over here is where you start having the police shootings and stuff like that. So you're kind of playing the headlines of some of that. EXOM. I think you probably meant Exxon, XOM, since we were talking about oil. Again, you had a very nice ride up here. They've been kind of, this is negative divergence here, where you see a lot of people taking profits while this thing's moving up. That was indicating that whether it was earnings or whatever, that you were going to have a sell-off at some point over here. Okay, now that it's sold off this area here around the 200-day moving average, it moves sideways here. You probably want to see it click up back up above the 100-day moving average before you start to go back in there. It's retraced a lot. In fact, just on this move here, you know, it's kind of finding support over here at the old high, and also at this 38.1%, 2% of the move up from down to here. So this is a logical place for it to find support. If it breaks below there, you'll get a move back down to here. That would probably be on a stronger dollar. But if the dollar stays low like this, you'll start seeing more buying in this. I think this was where the earnings came in a little bit short on Exxon. SPG is a little over 3% dividend. That also for Simon Group is going to give you a little bit of okay, I'm looking at it. I guess you can see this. Would you buy emerging markets now or wait till after her talk? I think you can nibble away at the emerging markets pretty much in here, because I think this is an extended move, and if we're all correct in the the world economies are moving up a little higher, you want to be in there. If you're a little bit nervous or a little bit cautious, then maybe you buy a little bit here. And then if she comes off a little more hawkish, and the dollar moves up a little bit, you wait for another pullback to buy some more. If she is dovish again, and then you start to move up, then you can buy a little bit more of the emerging markets. But again, I think you buy a little bit of these. The China bull triple thing, I like China right now. One of the ones I look at, it's in my emerging market portfolio that we'll be rolling out pretty soon. Here's the This is moving up a nice little line up here. It's walking up the 10-day moving average. You can see in there a little bit overextended on that. But here's the again. Look at this accumulation line. It's being bought. Whether they're saying it's too risky or whatever, let's even go a little shorter term. Let's go to 6 months. You're walking up a nice line. There's a 10-day moving average. You're crossing over the 200-day moving average over here, which is another bullish sign. And here's the up-down ratio, the up-down slope. You're seeing accumulation. I think you could, China looks fine in here. The triple leverage ones, you're always you're kind of you're speculating a little bit more than most people feel comfortable with. But again, if you like the move and you like the as long as the dollar stays weak, China should work its way higher. Also, I think you're up. What are you doing on that today? All the European, Asian markets were up today. The CAF is up here around 19. It looks like that's about it for the questions. I've gone over my limit again. I hope you got something out of this. You can go back. This will be up on the website in about maybe an hour or so. You can go back and look at maybe some of those charts, especially on oil, and write down the numbers where you want to see if oil goes above it and the dollar numbers where support and resistance are going to be. So that's going to do it. Thanks again. We'll be in here next week, and we will be off the week after that for Labor Day. And that'll wrap it up. Thanks, everybody.